Today we're breaking down the basics of banking. What do banks actually do? What services they offer? And why financial literacy is your number one money skill. So at its core, a bank is a business that holds your money and then turns around and lends it out. They make money by paying you a small interest rate and charging borrowers a higher one, that spread between the two. And out of banks, there are multiple types of banks, but we're just going to cover two in this video. Retail banks, which are for everyday people like you and I. Think like your checking accounts, savings accounts, personal loans. That's kind of for regular everyday people. Then there are commercial banks, which focus on businesses, real estate deals, much larger loans. So what do banks actually do for you? Well, let's talk about that and break that down. So banks typically open specific types of accounts based on what needs you have. So one of the main types of accounts there are what's called checking accounts. These will be your everyday spending accounts. It's in the name. You get checks on a checking account. And more so these days, you get digital checks, which are called debit cards, bill pay. You could direct deposit into this account. This is where most of your spending happens. And then more so for saving purposes, there are what's called savings accounts, where you park money and earn a little bit of interest for it. You are limited on how many withdrawals you could have per month. This is regulated. Then if you're down to lock in money for a little bit longer and risk being penalized for using the money early, there are what's called certificate of deposit accounts, or CDs, or even called time deposit accounts. This is where you can lock your money in for a set amount of time and the bank pays you a higher interest rate due to it being locked up and you being penalized if you did need to pull it out. Then banks also do loans for you. Think your car loans, your mortgages, student loans. The bank gives you this money now and you pay it back over time with interest. And then there are what's called revolving lines of credit. Think like a credit card. A short-term form of borrowing, and you spend the money now and you pay it back later. And if you carry a balance, you pay interest back. So with credit cards, let's say you swipe your card for $20 today, you pay it back like 2 days before it's due, you don't pay interest. But if you do hold a balance on your due date, that's when you pay the interest. Then banks, this is more standard and the current standard. They have online and mobile banking. You can transfer, pay people, check your balance 24/7. Even when banks aren't closed, this allows you to do all of that. Now, why does financial literacy actually matter in the first place? And this is the obvious answer. Because you can have money and still lose it if you don't understand the system. Being financially literate means that you know how to avoid overdraft fees, or what they even are, what a charged off account is, what interest really costs you in the long term, how to build a credit score, and how to spot a bad financial deal. When you understand how banking works, you make smarter moves overall. Confidence with money equals long-term freedom. So that's your intro to banking, clean, simple. Hopefully it was powerful for you. If this helped you, hit that like button, subscribe. For more no fluff breakdowns on money, the market, and the economy, I'm right here for you. Stay sharp, stay curious, and I'll see you in the next video, y'all.